Good day, Madam Hasliza, and good day, everyone. Welcome to our presentation on statements of profit or loss and statements of financial position with adjustments. We are Group 14 from sections 26 and 27. I am the leader, Mercy, and together with me are my group mates, Jasmine and Zenhen. Today, we'll walk through the step by step solutions for the assignments. Let's proceed. Right, before we can start off with the adjustments and the preparation of the statements, we'll first have to define what the statements are so we can get a clear understanding of what we're doing and why we're doing so. Therefore, what is statement of profit or loss? Statement of profit or loss, also known as the income statement, provides a summary of a company's revenues, expenses, gains, and losses over a specific period. Now, why is the statement of profit and loss important? Well, it provides stakeholders with a clear understanding of whether the company has generated a profit or incurred a loss during the specific period. It also enables investors, creditors, and other interested parties to evaluate the company's profitability and financial performance over time. Moving on to the statement of financial position, also known as the balance sheet. Unlike the SOPL, which summarizes financial performances over a specific period, the SOFP provides a snapshot of a company's financial position at a particular point in time, and this is usually at the end of a reporting period. The SOFP outlines the company's assets, liabilities, and shareholders' equity, showcasing the resources owned by the company, its obligations, and the residual interest of the owners. Now, why is the SOFP important? Firstly, it offers stakeholders a comprehensive view of the company's financial health, liquidity, and solvency at a given moment in time. Secondly, it helps investors and creditors to assess the company's ability to meet its short term and its long term financial obligations. And lastly, it facilitates comparisons with the previous periods, enabling stakeholders to track changes in the company's financial position over time.
Hi, I'm Jasmine from section 27. Now I'm going to talk about the need of adjustment. First of all, we need adjustment to ensure that all revenues and expenses are recognized in the appropriate period, matching revenues with the expenses incurred to generate them. Secondly, we need adjustment to convert financial statements prepared under different accounting policies to a common basis for comparison. Next, we need adjustment to ensure that assets, liabilities, revenues, and expenses are fairly valued so that we can get an accurate amount. Lastly, we need adjustment to enhance transparency by providing clear explanation for changes in financial figures. The first adjustment is depreciation. In the trial balance, we can note that the accumulated depreciation for the buildings is 4,000 ringgit and the accumulated depreciation for the equipment is 26,200 ringgit. The additional information gives that there is extra depreciation that is 1,000 ringgit for the buildings and 4,200 ringgit for the equipment. So, to calculate the accumulated depreciation, we will use the 4,000 ringgit plus 100 ringgit and we will get 5,000 ringgit for the buildings. And for the equipment, we will use 26,200 ringgit plus 4,200 ringgit and finally we will get 30,400 ringgit. The question is 3% of the debt by the company's account receivable is uncollectible. Account receivable that is uncollectible is also called allowance for doubtful debt. We will use 3% to multiply account receivable that is 59,000 ringgit in trial balance and we will get 1,770 ringgit for allowance for doubtful debt. The question is insurance expense is 11,600 ringgit. In trial balance, the prepaid insurance is 80,600 ringgit. The additional information gives us that there is extra insurance expenses that is 11,600 ringgit. To calculate the prepaid expenses in current assets in SOFP, we use the 80,600 ringgit to minus 11,600 ringgit. We will get 7,000 ringgit and we will record it in accumulated depreciation. The question is, accrued interest expense is 5,300 ringgit. In trial balance, it gives us that the basis interest expenses is 5,500 ringgit. The additional information gives us that there is extra interest expenses that is 5,300 ringgit. To calculate the total interest expenses, we will use 5,500 ringgit plus 5,300 ringgit. We will get 10,800 ringgit in the final. This amount will be put in the operating expenses in SOPL and accrued interest expenses 5,300 ringgit will be put in the current liabilities in SOFP. The question is accrued rent and assessments is 2,700 ringgit. The basis rent and assessment amount in trial balance is 10,000 ringgit. The additional information gives us extra 2,700 ringgit. To calculate the total rent and assessment amount, we use 10,000 ringgit plus 2,700 ringgit to get 12,700 ringgit. This amount will be recorded in operating expenses in SOPL and the accrued rent and assessment 2,700 ringgit will be recorded in current liabilities in SOFP. The additional information gives us that closing inventory as at 31st December 2023 is 39,700 ringgit. So we will get SOPL for 39,700 ringgit and 39,700 ringgit for SOFP2.
Since we've just completed all our adjustments, we can now proceed to preparing our statements. We'll first begin with the SOPL, followed by the SOFP. Now, what does the SOPL consist of? Keeping in mind, we also have questions or adjustments we'll have to include in the SOPL. So we begin first with the sales, followed by the gross profit. We can get the gross profit by subtracting the cost of sales from the sales, followed by the expenses, which includes all operating expenses with adjustments, as well as the net profit. And we can get the net profit from subtracting the expenses from the gross profit that we figured out earlier on. So let's proceed. So the first step in preparing any of our statements, be it the SOPL or the SOFP, is to include the company's name and what statement we're preparing and the date. So from our question, we know that the company's name is Wangi Company. And since we're preparing the SOPL first, we must include the statement of profit or loss. And the date is the year ended 31st December 2023. And the question has given us Ringgit Malaysia as the currency. Since we're in Malaysia, we must include the currency in Malaysia, which is Ringgit Malaysia, or RM for short. Then we can proceed with our sales. So we know the sales from the trial balance is 294,600 ringgit. Likewise, the net sales. And then we have a cost of sales, which we will subtract from the net sales. So we begin with the opening inventory and the purchases, which we add up to get the cost of goods available for sales. And then when we get the cost of goods available for sales, we must subtract the closing inventory from that cost of goods available for sales to get our cost of sales, which is 101,300 ringgit. So we must subtract that value from the net sales to get our gross profit, giving us the gross profit of 193,300 ringgit. Now we know the gross profit is 193,300 ringgit. We can now proceed to our operating expenses. For the operating expenses, we do have some adjustments to do, so keep that in mind and always check the additional information to make sure that we put in the right values. For salaries expense, we do not have any adjustments to do, so we keep the value as it's given in the trial balance. Likewise, the repair expense, likewise, the advertising expense, and likewise, the utility expense. However, for the rent and assessment, we do have some adjustments that we have to put in, and we have to put in the right value. From the trial balance, it is given that the rent and assessment is 10,000 ringgit. And from the additional information, we know that there is an accrued rent and assessment of 2,700 ringgit. So what we must do is add that 2,700 ringgit to the 10,000 ringgit, which will now give us the new rent and assessment value of 12,700 ringgit, which will be the value that will be included in the SOPL. Likewise, for the interest expense, we know that from the trial balance it is 5,500 ringgit, and from the additional information, we know the accrued interest expense is 5,300. So we just add that 5,300 ringgit to 500 and 5,500 ringgit. That will give us 10,800 ringgit as our interest expense. As for insurance expense, it's not even stated in the trial balance, so we must just add that value and add the insurance expense into the trial balance, which is 11,600 ringgit. Now, for the depreciation of building and depreciation of equipment, we're going to apply the same concept. From the additional information, we know that the depreciation for the year is 1,000 for the buildings. All we have to do is just include that 1,000 in our SOPL. The work will be done in the SOFP, which will be added to the accumulated depreciation. But as for the SOPL, we just include that 1,000. Likewise for the equipment that is stated, it is 4,200 for the equipment and building. That's for depreciation. So we just include that 4,200 ringgit. And for the bad debt expense, what we must do is look at the additional information. We know that it's 3% of the debt by the company's account receivable is uncollectible. So what we have to do is 3%, which is 0.03. We times that by the trade receivables, which is 59,000, to get our the bad debt expense of 1,770 ringgit. So we total all these expenses with the right value from the adjustment. It will now give us operating expenses to be 147,870 ringgit. So what we now do is subtract that value from the gross profit to get the net profit. So giving us the net profit of 45,430 ringgit.
Hi, my name is Chan En, and today I'm going to present about SOFP. Before we prepare our statement of financial position, we need to list out our non-current assets, current assets, owner equity, non-current liabilities, and current liabilities. First of all, before we prepare our statement, we need to state out our company's name and the statement we are going to do, followed with the date. After that, we open three rows, which is cost, accumulated depreciation, and carrying amount. And first of all, in the statement, we need to list out our non-current assets, which is land, buildings, equipment, and the current assets, which is closing inventory, account receivable, allowance for full debts, cash in hand, and cash in bank. And next, for the owner's equity, we need to use our capital to add with the profit and minus with the drawing. After that, we can count our current liabilities, which is account payables, unearned revenue, accurate interest expenses. And lastly is the non-current liability, which is mortgage. We can use the amount of mortgage add with the carrying amount that we count just now, and we will get the final answer of SOFP. And for the conclusion, in wrapping up our presentation today, we have explored the components of the Statement of Financial Position, which is SOFP, the Statement of Profit or Loss, which is SOPL, and the necessary adjustment that ensure accuracy and transparency in financial reporting. We have learned from our presentation today how important it is to accurately present our assets, liabilities, income, and expenses in order to give stakeholders a complete picture of our financial situations. Therefore, the adjustment we've spoken about guarantee that our financial statement appropriately display our financial position and comply with accounting standards.